Welcome back, traders and investors. We have a returning guest, Dave Landry, trader and founder at davelandry.com. Dave, how you doing today?
Doing great. Thanks for having me back.
Yeah, our pleasure. Getting a nice pop here in the S&Ps this morning, coming up near those all-time highs. We've hit this three, four times in the last five trading sessions. Are you still using this area as resistance?
Yeah, I think so. I mean, it's like on Friday, everybody and their brother had to buy stocks, and then on Monday, it's a big shoulder shrug. And you could look back about a month in the S&P, and we really haven't made any forward progress. So I'm kind of in a bit of a show me mode when it comes to the S&Ps. They're going to have to break out decisively and not look back for a while before I could get excited. Nasdaq stuck in a sideways range, and my big concern remains the Russell 2000. It looks like it's really rolled over in here.
What about some of these high-flying momentum stocks here? Because we saw most of these actually come back nicely even yesterday. Facebook finally breaking out through the $68 level. We saw a nice lift in Twitter. We've seen a lot of these social media stocks actually starting to come back.
Well, one thing in general that I've been seeing with the smaller cap momentum stocks, and that's reflected in the Russell 2000,
Yeah.
is that they've lost a lot of momentum. And so your high flyers have definitely lost the momentum. Even some of your more, I guess, conservative or lower volatility areas like the energies have lost some momentum as of late. So it's like I want to wait and see if that Russell can recover a little bit, and maybe if some of these stocks, I mean, even like Twitter and all, it's still down at fairly low levels. It's not like they're banging out the all-time highs or anything.
Right.
So I'd like to see some new highs in some of these issues before getting too excited.
So you're cautious here just because of the Russell.
Yeah, the Russell and the fact that the market is traded sideways. As a trend trader, the adage is it's like you can't catch a tan if the sun isn't shining, and you can't catch a trend if there is none. So the fact that the S&P has gone sideways for a month, and so has the Nasdaq, and if you look at the Russell, it's actually negative on the year. And then it's a little bit more than just that. I don't ever take a market at face value. I will actually go through a couple thousand stocks every night of the somewhat more liquid issues, and you get a pretty good feel for what's going on. And right now, I'm just not seeing a lot of setups. And usually, when the database is not producing many setups, it's usually a good sign to just let everybody else fight it out for now. About the only thing I am seeing that's kind of got me a little bit excited is the fact that gold looks pretty good and silver looks pretty good. Looks like a major bottom's in place here. But the only problem with those stocks is it could be a choppy ride coming off of those lows, and a lot of fits and starts along the way.
Dave, you sent some material on to talk about on the show, and it's something that, Dennis and I, we've kind of, had an evolution in our own trading, and I think it's important for people to, recognize the difference between short-term trading. Your actual quote with short-term trading doesn't make enough money, but long-term trading, you can make real money, but there's a lot of risk. So you talk about
Right.
a hybrid approach, and you just can't scalp anymore with the sub pennies, and you're taking risk on overnight positions. You're subject to the news. Just explain that statement, and then why you think hybrid trading is so important.
Okay, well, you can only predict the short term when it comes to markets, regardless of what anybody screaming on TV might suggest otherwise, or anyone else. It's sort of like akin to predicting the weather. If it's cloudy and thundering outside, there's a pretty good chance it's going to rain soon. You can only see so far out in the markets, but if you can get the short term right, then you can stick around for a potentially longer term trade. You can maybe take a swing trade profit and then bump your stop up and then trail that stop higher, maybe let it widen out with time so you can make that transition from that trader to that longer term. And I hate to use the word investor, but that's sort of what our goal is to stick with a position as long as we can. If you just go out and try to predict the long term, your results are going to be abysmal. We read about these famous traders who made all this money in longer term trading, but a lot of these guys have subsequently blown up because the drawdowns are just abysmal.
Another thing along those lines, and I know it used to be, a big pattern in my trading, was just plowing in the winners. You get something going your way, you just keep adding and adding until it hurts. And, what I found was, sometimes I would, add that last big lot, right at the at the end of the move and mess everything up. And then on the other hand, you don't want to be adding to losers because
Right.
right you can. So how do you work that balance?
Well, that plowing in works great if you're in a rip-roaring bull market, but as you guys know, everything works great in a rip-roaring bull market.
Yeah.
I've found that scaling out, and I get into some interesting debates on this, but I found that scaling out actually works for me. So I get that first little swing trade piece, hopefully within a few days, or at most a few weeks, and then I get that little piece off, and then I bump my stop to break even. And if the market continues to trend, I let that stop slowly widen out. But I have found that scaling out, even if you position yourself correctly, and even with a fairly small amount of risk, you'll still have enough shares on if that trend materializes. And we've held stocks on occasion, not often, but on occasion for more than a year or so. And if you capture a 400 or 500% move in a stock, and again, doesn't happen every day, but that could really make your whole year, even though you're not, like you said earlier, plowing into it and you have this huge position on. Even with a fairly small position, if you capture that longer-term trend, you'll do just fine.
What about the earnings plays? Do you get down and dirty in that, or do you kind of just avoid it? Like we obviously have Apple, Microsoft here going to report tonight. Do you try to trade ahead of those, or just as a technical trader try to avoid the earnings?
I avoid all news, all earnings, and everything. I think you have to take an all or none approach, and I just ignore everything in the market. And if we're going to position ourselves correctly and catch that little solar stock down when it's first beginning to break out to new highs from low levels and forming some sort of transitional pattern, if we're going to be in that stock for hopefully 6 months to a year or two, there's going to be plenty of earnings along the way. And then my general feeling is surprises in general tend to happen in the direction of the trend. So I try to avoid all news. Now, occasionally, one more point on that. Occasionally, you might have some bad news in a stock, and it could actually create a tradable pattern. But I'll actually trade the pattern and not the news so much. So I have a setup I call a trend knockout. So sometimes you'll have a stock that's really trending nicely. Some bad news will come out. You have a big down day. And then by the end of the day, the stock will recover. It has that what I call a knockout bar, a TKO, trend knockout bar. And then you can look to get high above that bar. It's like the news gets flushed through the system real quick. Everybody panics, and then everybody says, now what? And then the stock goes right back up. So, but I don't actually use news unless it's reflected in the chart.
And I've got the technical. So if you're looking at that kind of thing, and you're looking at something like Apple today, releasing earnings, if you have a setup or a trade point, will you trade it at that level because the news catalyst drove it there? Or you just still know hands off, you'll wait to trade it tomorrow?
Well, a setup is a setup is a setup is the way I look at it. Right now, Apple's not a setup, so I wouldn't take it. Apple's also kind of a big fixed stock, although it somehow defies gravity. Usually a big fixed stock doesn't move as much as Apple does, so I usually avoid the more efficient, thicker stocks like that, meaning high in volume. And then they're also overanalyzed, as you know. But Apple really hasn't gone anywhere in about a month or so it wouldn't be a setup for me.
Okay, and what else is on your radar for today?
I like the juniors, gold miner juniors, GDXJ. I think they have potential shorter term in here. I think there's a potential for a bigger picture bottom in place. But again, we won't know until a few months from now. But right now it looks pretty good over the short term.
And how do you play it? Are you playing it with the stock? You playing it with options?
Well, I'm long some individual gold stocks such as ANV, but I think the GDXJ is a good way to get some exposure to those more volatile stocks like ANV and those smaller gold stocks that have been beat up over the years that are beginning to rally off their lows. So I think that's a bit of a safer play, but I do prefer the individual stocks. But if you just wanted to gain some exposure to those more risky stocks, I think the ETF is a good way to do that.
Okay, and also, with this market, it always seems like if they're selling something, they're buying something else. And right now, the financials are showing a lot of life here. Goldman had some good earnings. Citigroup, J.P. Morgan. Yeah, I've been trading any of these financials.
Well, a lot of them, if you look at like the sector overall, like the XLF, it's been mostly sideways as of late with everything else. It's kind of trading in line with the S&P. So I haven't seen anything, I should say, that exciting there lately. Again, I'll let the database tell me what to do. I mean, earlier you were asking about stocks that are trending. The only really thing I'm seeing out there, like right now, it's in a bona fide solid trend, would be aluminum, and it hasn't set up lately, but it's going it's pretty much going straight up. So I let the database tell me where I should be looking, and so I'm keeping an eye on aluminum stocks, keeping an eye on those metal stocks. And the good thing about all those stocks is they can trade contra to the overall market. I'd be concerned about the big financials because I think they're going to, if the S&Ps begin to tank a little bit in here, I think they're going to be in line with the market because they tend to be a little bit more efficient and they tend to sort of mirror what's going on in the overall market.
Okay. All right. We've had Dave Landry on, trader and founder at davelandry.com, giving us his takes. And next time you're on, Dave, you're going to have to tell us those key components in your database.
Oh, fantastic. Fantastic.
Okay.
Well, thank you, Joel. Thank you, Dennis, too, for having me on.
Okay. We'll speak to you soon. Thanks, Dave.
Thanks,
Thank
Dave.
you so much. Bye-bye.